Well, welcome everybody. Again, my name is Todd Christensen. I serve as the SVP of Advancement and Member Experience with Capit Credit Union. We have two amazing individuals from our mortgage team, and I'll introduce them, and then I'll hand the time over to you two. So first of all, Kitty, if you can give a great wave out to everybody. We have Kitty Shervik. She is our VP of Mortgage Lending. Kitty, how long have you been with us at Capit? It's been what?
5 years.
I was going to say 4 or 5 years.
Yeah,
How
5
time
years.
flies. So we appreciate you being with us here today, Kitty. And then we have Dan Sullivan, who is Marketing Sales Manager. And I don't know if I want to ask how long you've been here, Dan. That's got a couple of digits behind it, I think.
Well, no. It's 7.5, I think.
7.5. Okay. Well, maybe it's just because you've been around the mortgage industry in the Treasure Valley since the Treasure Valley was called the Treasure Valley. You can take that out on me later. But Dan, we're glad that you're here with us. And let me turn it over to you two as we continue our webinar series, which we have affectionately called Lunch Money. You're here during your lunch hour to gain some valuable information. And today's topic is how to buy your first home. With that, let me kick it over to you, Dan and Kitty.
Great. Well, thank you, Todd. We're excited to be here. I think Kitty and I worked together back in the 90s. And so I think between the two of us, even though she doesn't look like it, we have somewhere in the neighborhood of 70 years of experience in the mortgage industry. So any questions that you have, I think we can probably handle or figure out how to find the answer. So if you have any questions throughout any time, feel free to type it into the chat box, and Todd will watch that for us and get those questions to us. So today we wanted to chat about a topic of how to buy your first home or the steps in buying a home. And with prices going kind of through the roof lately, it seems like it's getting more and more difficult. I think. Well, that's true. I think there's still some options available, and there's programs. There's some ways around some of the challenges. But today, what I'd like to do is get my screen to advance here. Bear with me. This was working just a moment ago. There we go. So today, the things I'd like to cover is who is a first-time home buyer. It seems like that should be pretty obvious, but it isn't, because it's the mortgage industry. So in mortgage, we try to confuse things as much as we possibly can. So we'll go through that. I want to talk about should you buy a home? Home ownership is a wonderful thing for the right person at the right point in their life. It may not be for everybody. If you determine that it is the right time, or you're not sure, then we'll talk about some of the reasons why you should buy a home, and the challenges to buying a home. And then we'll talk about some of the loan programs available, that things we have available, things we have in our quiver, arrows in our quiver to help you through the process. So and then lastly, the new first-time homebuyer savings program, and how that is effective, and how you're able to use that to help save for your first home. So first-time home buyer seems like, if you haven't owned a home ever, that you're a first-time home buyer, and while that's true, also anybody who hasn't owned a home in the last 3 years is considered a first-time home buyer. And we'll ask for tax returns to show that you haven't written off any interest, mortgage interest on your taxes for the last 3 years to prove that. But essentially, this is people returning to the market. So let's say you had a home, and for whatever reason you sold that home and relocated to Boise or something, and you may be considered a first-time home buyer again, and some of these programs may be available to you. So keep that in mind going forward. Now, if let's say you're recently married, your wife owned a home at one point and you never have, if she owned a home within the last 3 years, you may not be considered a first-time home buyer. So I would encourage you to reach out to one of our loan officers and ask that question of, am I a first-time home buyer? Are some of these programs that Dan and Kitty talked about valid for us? And because everybody's situation is a little bit different, so we'll work you through that. Should you buy a home? And this is something that I think that everybody needs to ask themselves, and these are questions you need to answer for yourself. Are you ready to buy a home? There's a lot of pieces and parts and moving things that go along with home ownership. So one of the things that we'll look at is your job stable? And that's a question we'll look at through documentation, and is your job likely to continue? But it's something that you probably need to look at is in light of, do I like my job? Do I feel like I'm in a job that's going to continue for a long period of time? You don't want to be purchasing a home with a monthly payment that's and then find out that or realize that you don't like your job anymore, or you don't want to continue doing what you do, or you don't feel like you're stable within the company's not stable. So ask yourself, is your job stable? Is your relationship stable? And this is something that we would never delve into from our side, but let's say you're buying a home with a significant other, a wife, a partner, a friend, whoever. Is that relationship stable? You're entering into a long-term contract, and if your relationship isn't stable, if you don't feel like it's going to last as long as you own the home, then that's something you probably need to ask yourself is, do I want to enter into a contract with this person? Are you happy with the area? Do you see Boise or wherever you're Twin Falls, wherever you're buying, do you see that as an area that you're happy and you want to stay in for a long time? If the craziness of what we're seeing as far as growth in Boise is already bugging you, then maybe you don't want to buy a home here that you are going to have for several years. And have you considered how long you're going to live in the home? And the first three questions really kind of lead to the fourth. We're in a unprecedented time period right now where home values are going up very, very quickly, and we expect that to level at some point. It may even come down. It's hard to tell. But if you are looking to buy a home and you think you're only going to be in it for a year or two, you might get yourself into a situation where the closing costs getting into the home, the closing costs selling the home, the realtor fees, different things like that will eat up any equity that you make. So I typically tell people, if you're not, if you're planning to buy a home, plan on long-term, 3 to 4 years, 5 years at the minimum. And you might get lucky and see a bunch of run up and a ton of equity grow in that home over the short period, but you don't want to bet on that. So just one other thing to keep in mind. And then as far as homeownership, are you ready for the responsibility of homeownership? You're taking on a lot of things here. There's maintenance issues. I recently, in the past 2 years, I think we've replaced the furnace, the AC, the roof. We've remodeled the kitchen. So there's a lot of maintenance in a home, especially if it's an older home. And so are you ready for that responsibility? And are you ready for the yard and lawn care? Is that something you enjoy doing? And so things like that, just things you should consider before buying a home. And if the answer to all those are yes, then by all means, let's get in and start chatting about this. So this one's a little bit more obvious, I think, is why should I buy a home? And so the appreciation in a home. Let's say you bought a $400,000 home today, and typically over a long period of time, we'll see appreciation gains of about 5% per year. That's kind of normal. We've seen things go up dramatically greater than that, and in 2007, 2008, we saw them come down quite a bit. I think in Kittie, in some areas, we see home prices in the valley fall off 40% in.
Yeah, 30%. Canyon County was hit pretty hard, about 30%.
Yeah. And so, but if we look at a long term, if we look at 30, 40, 50 years, your home should appreciate 5% per year. So your $400,000 home is worth $845,000 15 years from now. So assuming that we see that normal growth line, then you've made a lot of money on your home. You get some pretty cool tax write-offs. The interest that you pay on your home is a tax write-off. The taxes, property taxes you pay is a write-off. And so you really sometimes I'll have first-time home buyers who are looking at buying a home, and they're like, well, I can't really afford that much. And when you remind them, well, you're going to write off this much per year. So you can actually increase the number of deductions on your W-4 and get a little bit more money in your pocket, because at the end of the year, you have some of these write-offs that help you with taxes. And a mortgage is really kind of a forced savings account. A 30-year mortgage at the very beginning, you're not paying much towards principal, but every month you're paying down the principal a little bit. And that really is kind of a forced savings account. And then that you're paying down your mortgage, your home is appreciating. You really are kind of forcing yourself into savings. And then the stability of owning a home. I think owning versus renting, it's the home is yours, so you have that feeling of home ownership. You certainly feel that this is my place and my home and my family's home, and so there's a great feeling of stability to have your own home. And lastly, there's no better way to build wealth than to own a home. Statistics throughout the years, and I've seen it multiple times, they show the growth of wealth between a homeowner and a renter, and homeowners build wealth much faster than people who rent, and a lot of that's that appreciation gain and buying down or paying down your mortgage. So there's certainly no better way to build wealth than to own your home. Of course, there's challenges to buying a home, and some of the ones that we see most often is you have no down payment. Can't afford the down payment. You may have credit issues. You may have had problems in the past or problems currently, and with your credit and the ability to pay your debts on time, or items like that. There's sometimes people don't realize that they had leftover after the insurance paid their medical bills. There was money left over, and they didn't realize they had to pay it, so they have a collection from medical or something along those lines. So there can be credit issues. Too much debt, something we see often for first-time home buyers, in the fact that they have a lot of student debt. They have I don't want to point anybody out, but we have sometimes buyers who go out and they buy themselves a new car or a truck, and have this new fancy car and truck, and then decide, I need a really cool house now to go with my cool car and truck. And when they come in, we find out that well, before you bought the truck with the $1,000 a month payment, you qualified for a pretty good house payment, but with the truck you don't. So too much debt is certainly a problem, and then just the inability to afford a house payment, so is another challenge. And so one thing I would ask I've always asked every first-time home buyer to do is if you are looking at you're thinking about buying a house, you're thinking about buying a house in a month, in a year, somewhere down the road, certainly get with a loan officer as soon as you can, and start chatting with that loan officer. Most places they'll pull your credit for free. They will, with your permission, they will go through your income, your debts, your credit issues. They'll talk to you about what you qualify as far as down payment programs. So don't be one of those people who goes out and puts an offer on a house and gets it accepted and then goes to the lender to find out that you really don't qualify or you can't buy the home because of some of these issues. So get with a loan officer early in the process, and it doesn't hurt to go with a realtor early in the process just to find out, kind of what the market looks like, and not necessarily go out and look through a whole bunch of homes or anything like that, but what's going on in the market, what areas do you recommend, what areas don't you recommend, and but certainly that's something I would do early in the process.
Dan, that is great advice, because it really helps a potential homeowner understand the process. And if there are credit issues that have to be addressed, the loan officer will guide you, help you to cure those. You talked about down payment, understanding what is needed, and just start planning ahead. And if your debt to income ratio is a little high, the loan officer can also guide you on possibly refinancing your auto to get a lower payment. But there's so many options available, and so that is so important. So Dan, great advice is ensuring the potential homeowner connects with a qualified loan officer to guide them through the process.
Yeah, thanks. One of the other resources available, and we'll talk about it a little bit more, but there are first-time homebuyer courses available, and you can take a first-time homebuyer course from Idaho Housing and Finance Association, which we can provide that information to you. I think they're $25 or something like that, and they take you through the kind of an extended version of what we're doing today, but it's a course you take, and they talk about all these things, and they make you sit down and fill out a budget. Here's what your current debts are. Here's how much you spend. Here's how much you spend when you go out to dinner. Here's how much you spend for your car insurance, what your utilities may be, and really come down to a bottom line of what it is you can afford. As a loan officer, I often found that there was two different numbers. You'd get somebody that would come in and sit down. They say, I want to see what I pre-qualify for. And you would say, well, my first question I'd like to ask was, how much of a payment are you comfortable with, including your taxes and insurance and everything? And they would give me that number. And then from there, I would calculate out the formulas to figure out what you actually qualified for. And a lot of times what the homeowner qualified for was considerably more than what the number they had in their mind of what they could afford. So those are two different numbers sometimes, and you need to figure out in your own mind, how much can I comfortably pay for a house payment, including everything, plus still put money into savings and have a little fun, and have money to buy shovels and rakes and hoses and put money away for problems with the water heater down the road and things like that. So, but we talked about the challenges. Let's talk about some of the solutions. So, solutions to help you buy a home. A lot of people don't know that there are programs out there that are low down or no down payment loans, and every now and again we'll still run into first-time home buyers who think that they have to have 20% down to buy a home. That $400,000 house we talked about, actually, if you qualify through Idaho Housing and Finance Association, which we do those loans, you can actually buy that house for 0.5% out of your pocket, which is on a $400,000 house is $2,000. So really that's that's the value of a moderate mountain bike these days. You know, for $2,000 and structuring the purchase and sale agreement correctly, and you can actually get into a house for as little as that. Cap Ed has a program for the school districts, and this is available to anybody who draws a paycheck from a school district, and it's called our Cap Ed Educator 100, and we will actually do 100% financing on that loan. And so there are qualifications. There's credit qualifications. There's different things that we need to look at. But if you are a teacher, an administrator, a janitor, a cook, somebody who works for a school district, then certainly ask us about our Cap Ed Educator 100. We have a loan we call CHAMP. It is the Cap Ed Home Affordable Mortgage Program, and this is designed for first-time home buyers. It's a 3% down program, but what it allows for is mom and dad to come in and co-sign with son or daughter on a loan, and so we can put everybody on there, and that's typically a problem down the road, because to get mom and dad off the responsibility for the home once the son or daughter is making enough money to qualify on their own is very expensive. You need to refinance again, and we hate to refinance you out of these low rates. So CHAMP was designed to be a program that we could get mom and dad off the loan 3 years down the road or so without having to refinance. We go in and we make sure that the son or daughter qualifies on their own, and at that point that their credit's still good, that the home's still in good shape, and we basically modify the note and the deed of trust and move forward without having to do a refinance. We don't believe 3 years, 4 years from now that we're going to be looking at these same great low interest rates. So not only is it expensive to refinance, but you'd be refinancing out of potentially a really good interest rate. So CHAMP is something that we have available here, and it's exclusive to Cap Ed. Whoops, did I go too far there? And then the first-time homebuyer savings program is a new program available that is designed to encourage people who are saving for their first home. And in Idaho, it varies by state. In Idaho, it's pretty cool. A single person can put up to $15,000 a year into it has to be a designated first-time homebuyer savings program, and to a maximum of $100,000. A married couple can put $30,000 a year up to a maximum of $100,000. Now, where this becomes really cool is that $15,000 or $30,000 as a married couple, it can actually be often, and you need to check with your tax professional, but it's designed to be taken off of your state taxes. So let's say you and your spouse made $100,000 last year. On your state taxes, you're going to reduce that by the amount you put in, so up to $30,000, and pay much less in taxes. So that's a pretty cool program that's available now in Idaho. Todd, do we have any questions from the studio audience?
I haven't seen any questions come in yet, so let me invite folks to go ahead and put inside of the chat or the Q&A if you have any questions. But Dan, if you go back to that last slide, I wanted to talk a little bit more about that first-time homebuyer savings program.
Yeah.
It is new to the state of Idaho. I think it's about 2 years old. There's been a lot of questions with the state tax commission. How's that going to be worked or facilitated? For those who may be familiar with the Idaho Medical Savings Account, the first-time homebuyer savings program is going to work very similar. For us at CapEd, we're preparing that program. Our operations team and programming team is finalizing the aspects of being able for us, CapEd, to provide the first-time homebuyer savings program, which I think is pretty cool. I have daughters who are in their mid-20s, and they're both chomping at the bit to purchase their first home. They've been saving for the resources. They both live, well, one lives in Utah, the other one lives here. One that's in Utah is going to be living here in the next couple of weeks. But they're both looking at, okay, I can put this money that we've been saving into this first-time homebuyer savings program. Then I can take it right off my Idaho taxes. And I think that's a pretty amazing incentive for those who are looking to purchase their first home. Kittie or Dan, as it relates to that, any other information that we can share, or thoughts or tips how, in this case, younger individuals who are buying their first home, how they can use that program?
The first-time homebuyer program?
Yes.
Yeah. I think the tax savings is pretty incredible, depending on where you fall into income-wise. Mm-hmm. And so certainly, having, let's say you are able to put away $5,000 a year for a couple of years, you're certainly coming in with a bigger down payment, and the bigger the down payment, sometimes the better the interest rate, the more favorable terms that the loans allow for. So, still we have some of these low down and no down payment loans we talked about that are incredibly low interest rates, and FHA loans, VA loans, some of those that are available out there are really often lower interest rates than the market. But they have other fees, mortgage insurance, other things with them as well. So a lot of there's some gurus out there who will tell you that you shouldn't buy a house unless you have 20% down, and that's, I'm going to leave that up to the individual. I know I bought my first house FHA and sold a car so I could come up with the 3% down on my $72,000 home, and I walked away 8 years later with $60,000 equity. So had I waited until I had 20% down, I would have lost a lot of equity. But that's up to the individual. Just the first-time homebuyer savings program is awesome for being able to save those funds and have a tax advantage to do so.
You reference your first home and purchasing that, and did I hear $72,000? Is that what you paid for your first home?
That was 1991 here in Boise. Yeah.
Well, that's kind of the price of a pickup today, right?
I don't think you can get a new pickup for that price, right?
We have loans for those as well, right?
Yeah.
My experience when I purchased my first home is started out at Boise State, and my dad said, here's $2,000 now for housing here and there, and maybe some more later on, or here's $3,000 and my signature, but you don't get any more. And I took the latter. So around 21 years old, I bought my first home that was $76,000 in '93. And similar to your experience, I had it for about 4 years, went through school, kept it for a couple of years after graduating, and then turned around and sold it for a pretty good gain.
Yeah.
So,
and
Kittie, let me ask
another solution for buying a home, gift funds are allowed. And so don't put yourself in that corner thinking that you have to come up with the down payment. Gift funds are allowed. So
that's one of the things that I found interesting around the first-time home buyer as I read into that. There's no seasoning or meaning that the dollars have to be there for a certain period of time. So from a tax advantage, not a CPA, not a tax accountant, not an attorney, there's my disclosures, but from my understanding, you're able to take the gift, put it into the first-time homebuyer savings program, utilize it for the intended purpose, and then be able to have that tax advantage.
Great.
So,
Mm-hmm.
some cool things to be able to help first-time homebuyers. So I mentioned my daughters, they're mid-20s. Both of them are complaining, Dad, we're never going to be able to afford a house. So when I meet with them for Sunday dinner, Kitty, what should I tell them this next Sunday from what I've learned today?
First thing is there are options available. Reach out, get pre-qualified with a loan officer. And I love, what Dan said, be prepared knowing what you feel comfortable with for a payment. Let the loan officer then back into what your sales price would be, what your end payment would be, and then that bottom line, how much do I need to save? So you know what the down payment is going to be, what your closing costs are going to be. So then next step, when you meet with the realtor, if you are short on cash, going into that transaction, knowing how to structure the transaction to meet your financing needs. Again, seller can pay closing costs, and there's just so many options. So step one, get pre-qualified.
Pre-qualified, and is it through that process that with the loan officer that they can help guide first-time home buyers on the pitfalls and things to watch out for? Is that something that we would encourage them to take a look at as well?
Yes.
So they'll meet with the homeowner and they'll guide them to, obviously inform them of all the programs that are available. So the member can select what is the best program to meet their financing needs.
Okay.
And also a lot of times looking at that credit, if we pull your credit and we see that we have, you've got some problems, you got some issues, you got a little bit too much debt, then let's, the loan officer can put together a plan of here's the steps to get to where you need to be. And so I always said that the answer is never no, the answer is not right now.
Yeah.
And so, we may not be able to do it right now, but here's the steps to get to yes. So
I like that statement of not no, but not right yet.
mm-hmm.
You reference the credit score, the credit report. My marketing brain goes into some of the resources that we have available for individuals who are members of CapEd. We know that we have a listening audience who are members as well as non-members of our credit union. But for those who are CapEd members within e-banking, you're able to see Savvy Money. If you haven't had an opportunity to enroll in that, that actually gives you the ability to see your credit report and your credit score. So it'll show where you have potentially missed payments, what credit has been issued to you, what utilization you've had. And the cool thing inside of there is a simulator that if you take certain action, how would it impact your credit score? We actually did a podcast on this a couple of months ago, myself and our VP of Consumer Lending, Jeremy Sankwich. So for those who would like more information on Savvy Money and that credit score simulator, check out capedcu.com, and then in the upper right you can see our blog, and then search for the one on credit score. So that's some good resources. Well, what about loan calculators? What resources, Dan, you want to share that we as CapEd have or others would have around loan calculators?
Yeah, well, loan calculators are great for, and we have some available on our site, at capedcu.com, that you can go in and figure out what your payment is, but what they don't show, and they just don't have enough information to show often, is it'll show you what your principal and interest payment is to repay the loan. It won't show what the taxes and insurance and potentially the mortgage insurance is. So you can kind of get an idea, but of what you can get a very close idea of what the loan payment will be, but your overall payment, if you're able to talk to a loan officer, they can say what area are you in, because taxes in Garden City are greater than they are in Boise, and Nampa sometimes it has areas that are higher from one neighborhood to the next. And then depending on the size of the house, the age of the house, they can help calculate kind of an average of what the homeowner's insurance may be, and then also if you're putting down depending on what program you're looking at, if it's a low down payment program and there's going to be mortgage insurance involved, then they can give you a pretty good idea what that is. So calculators are wonderful to a point.
So you mentioned in those calculators that it has the principal and the interest. We had that experience with, again, referencing a daughter. Her and her husband were pretty excited about a home. They used the calculator, like, it'll be tight, but I think we can do that. And then my wife said, yeah, but you're missing a couple of letters in that calculation called taxes and insurance. And then when that was added to the equation, I was like, oh, we need to do a little more savings so we can have a larger down payment so that number is a better number. So great cautionary note as it relates to the calculator showing the principal and then the interest on those payments.
Exactly. Yeah.
Okay. Well, I know that we're coming a little close to this. Let me check and see if we have any other questions from folks here. Don't want to ignore those who are online. I don't see any other questions. For those who have joined us on Facebook Live, we are not watching the Facebook live stream for questions. So if you post those, it's best to reach out to our experts here. Dan, if you want to move forward and advance to your and Kittie's contact information. So again, for those who are on Facebook Live, we apologize. We're not monitoring the comments there. So if you've posted questions there, it would be best to reach out to Kittie or to Dan at the information on the screen. And then I think we have 2 more of these webinars. We had one on Tuesday that was really exciting information around what's happening in the Treasure and Magic Valleys. Dan, you want to share what's coming up on Tuesday, June 29th?
Yeah, on Tuesday, we're going to talk about ways to protect yourself in this changing rate environment. Rates have been low. Everybody, the economists believe that they're going to start easing up. Not, we shouldn't see anything go up greatly, but it's economists are doing nothing more than guessing based upon things that have happened in the past. So, but we have a number of programs that may be able to help if you are building a home, if you're searching for a home. There's different ways to protect you in a changing rate environment until you're able to find your home, build your home, whatever route you're going. So we have a couple of programs that we'll talk about on Tuesday.
And then we wrap up on, holy cow, it's already July 1st, so we wrap up on that one. You want to give a little bit of a spoiler on what's coming up on Thursday, July 1st?
I forget what we were going to talk about, Todd. Do you?
I think on that one,
retire your mortgage. Retire your mortgage.
Yeah. One of my favorite subjects. I can't believe I forgot about it. Yeah. So the 3 of us have, well, except for Kittie, Todd and I have a little bit gray hair going on there. But you certainly want to retire your mortgage before you retire, and we'll talk about ways to do that. So there's a number of strategies. You can certainly make bigger payments and pay off your, but there's a number of different strategies that are available on how to pay off your mortgage before you retire. And even if you're in your mid 50s, then there's ways to get that done. So
we have that coming up on July 1st, the one around how to protect yourself in an unusual interest rate environment or low interest rate environment. That's on Tuesday the 29th, again from 12:10 to about 12:45. I'm doing a quick time check here because we're kind of right at that number. And then on July 1st, how to retire your mortgage before you retire. I encourage you to take a look at that one. My wife and I have actually implemented a couple of the techniques that Dan will share and helping us make sure that that big mortgage is paid off and it's not a part of your budget calculations when you get ready to retire. So with that, we want to express appreciation to Dan and Kittie. Thank you for your time this afternoon. Thank you for those who have joined us both here on the Zoom presentation webinar, as well as for our audience on Facebook Live. As a reminder, this and others will all of our webinars will be posted at capedcu.com. You can check out in our Learning Center for this webinar and past webinars that we've had. And with that, thank you, Dan. Thank you, Kitty. Have a great afternoon.
Thank you, everyone.
See ya.
Thank you.